Flat day on Wall Street, ladies and gentlemen, but we did see the tech-heavy NASDAQ rise almost 1%, leading everybody to think that the rally is going to continue, at least for the foreseeable future. Hi, everyone, and welcome to Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I'm joined by my friend and co-host, Tobin Smith, out in sunny and hot Scottsdale, Arizona. And Toby and I want to break this down because here we are at the end of the quarter. We have some A-list guests coming up next week to close it out and leading into the third quarter. But every trader, every investor wants to know, is this bull rally going to continue? Toby, what do you think? We're talking about it off air, but I know you have a lot to say about this.
Well, I guess, Todd, what I'm intrigued by is, first, let me draw the actual financial situation. Okay, number one, the Federal Reserve and the EU and the UK are taking about $200 to $300 billion of cash out of the world monetary system per month, not per year, per month, right? So yeah, and the way that works is that they don't refinance the debt when the debt comes, when the bonds that they've sold come out, they just let them go away, right? So that money's out of the system. When money's coming out of the system at that level, investors have been taught since the day of, back in biblical times, that you want to own companies that don't need any cash. Matter of fact, that have very little debt, that have very high gross margins, that have global reach. Well, gosh, who are those companies, Todd? They're mega cap tech stocks, right? Number one. So what's leading the market? Then number two, people are getting, their shizzle and a twizzle because 8% of the stocks listed in the, this S&P 500 are providing all of the earnings, all of the improvement in the value of the index. Well, guess what, Todd? I know I'm a little older than you are. Obviously, I have more hair, but the bull markets have always been that way. Louise Yamada, who's like 150 years old, put out this research on Monday that went back to the 20s, 30s, 40s, 50s, everything. And guess what? It's always been that way. And you know why it's always been that way? Thank you for asking that question, Todd. Because, every 10, 15 years or so, new shizzle comes into the world, into the economies, into technology, et cetera, starting with the Ford Model T, then movies, and then electricity, and then, blah, 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 right?
Right. The evolution of tech.
Yeah. And the evolution of tech, right? So we're in this new, we like to call it the tech stack right now. About every 15 years, Silicon Valley, not Silicon, Brian, Silicon
I do, and you're right though. And we talked about this. Well, we've talked about this many times on Buy, Hold, Sell, where it has been just a pocket of certain stocks that are continuing to move this forward. And you are right, that evolution of technology right now, all the world is talking about AI. And this, I know you are a subject matter expert on, Toby. You've been beating this drum for months now on Buy, Hold, Sell, and also in your own commentary for True Market Insiders. And I got to say, everything I'm reading from what you're writing tells me that this is a story that is not going to end anytime soon. This actually could be the story of the next decade. So what do you think? I mean, is this going to continue to propel markets even higher? And is that just going to, is it an artificial feeling though? Because it is just that certain amount of stocks that are.
Oh, wait a minute, artificial feeling from artificial AI? Time?
Yeah, I know. I'm trying to incorporate. I thought
you write that line, because I don't think you can make that up.
Well, you can use as a headline.
Right. Well, here's another thing that, is absolutely average that, people are pulling, whatever hair they have left out. Oh my gosh. Anytime you see the QQQs, the NASDAQ 100, and the chart is going like this, which basically, let me see, this was May and this was, 5 days ago. I call
You could
that
be a weatherman.
Yeah, I call that a Viagra chart, by the way. So anytime you see the melt up, a parabolic move, exponential, whatever you want to, that is the trading, monsters, the quant buyers, the momentum buyers, the CTA traders, et cetera, And as soon as NVIDIA that hit, bing, 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 every buy signal went off for any high beta stock. And that's exactly what happened. Now, when you see that Viagra chart, ladies and gentlemen at home, you have to understand that at some point in time, these guys are going to want to take profits because they're not investing. What they're doing is buying stuff that has very high momentum, and they will stay owning it until the momentum. So there's this thing called relative strength index, RSI. And when you look on a chart, any simple chart, Seeking Alpha or Yahoo, whatever, when it gets above 70, like it was 85 4 days ago, then that is the sign that essentially the peak is hit. And now they're going to come back, and those stocks are going to come back to their 50-day moving average. Maybe 20-day if it's NVIDIA, but it's 50 moving average. And that's exactly what we're getting. All of this is like by the book. This is like stock market 101. And people, and old David Rosenberg, God bless him. He's calling for, 2,000 point bear market here.
I know.
Because tech stocks are overvalued. David, for Christ's sakes, I've known him for 30 years. Tech stocks is always overvalued.
Yeah.
Because particularly software ones, because it's the only business in the world where you spend $10 million creating your product and then you sell it to somebody and there's no additional cost. It's just, ones and zeros. So there's no additional cost. We're not making a car. We're not making a building. We're selling software. Now we just rent software. So, man, you can't compare the business model of building homes, let's say, with creating artificial intelligence, real artificial intelligence operating system. One of our favorite companies is doing that right now. You just can't. You're mixing apples and oranges. We're getting that pullback. But what we're telling our clients and what we're telling our subscribers at Transformity Investor, thanks very much, is we're going to buy the dip in the absolute 100% winners of the AI arms race. I've been calling us sort of the next generational, did I say that? Generational wealth building opportunities. It's so much like the TMT days when you started first doing bulls and bears with us. And, and TMT, the tech stocks, the mobile stocks, they peaked just about when we started bulls and bears too.
Yeah.
It was literally, I got hired, I replaced Jim Cramer because they fired him. It's only the third time he's been fired from, being a show. And I came on the show and the first thing I said was, guys, the dot-com bubble is burst. And if you're long all these stocks, get the hell out, because they were sitting on no visible means of support, with no earnings, with borrowed money. If they had earnings, they were selling it at 200 PE, blah, blah, blah. Okay, that was the bubble of bubbles. We are not near the bubble of bubbles right now. And all of these mega cap stocks make, here's a very specific term, a shit ton of cash every month.
Yeah.
So, don't fall for it, but be smart. And don't be buying when it's sitting at over its 10-day moving average or its 20-day moving average. Let it come back to where normal buyers would be, and that would be the 50, maybe the 100-day average. But you want to be buying the dips on the AI leaders. We put together what I am calling now a generational wealth building portfolio of AI direct beneficiaries, and we are buying when we pull back.
And I love that. I love that the term AI arms race. That's huge. I have not heard anybody say that. And I am a Jim.
You don't.
I don't get out much. I am a Jim Cramer fan. I'm surprised he should be actually giving you a royalty. I'm sure he'll end up using that. So I could see that. But listen, let's close out on that block because I want to come back after the break too.
Sell brought to you by CrossCheck Management. In a world where secrets have consequences and lies can't be hidden forever, immerse yourself in the gripping new thriller No Lie Lives Forever by Todd M. Schoenberger. Join Wall Street hedge fund manager Travis Carmichael as he delves deeper into a web of corruption and conspiracy, finding himself entangled in a high-stakes game where souls are at stake, and trust is a luxury he can't afford. Critics and readers can't get enough of this heart-pounding page-turner, calling it a masterfully crafted suspense novel that will leave you breathless. No Lie Lives Forever is a masterfully crafted thriller that will leave you guessing until the very end. With its intricate plot twists and unforgettable characters, this is a must-read for fans of suspense and mystery. From the mind of acclaimed author Todd M. Schoenberger comes a novel that will challenge your perceptions and keep you turning the pages late into the night. Critics and readers alike can't get enough of No Lie Lives Forever. It's been hailed as a gripping roller coaster ride, a true page-turner that will leave you breathless. Don't miss your chance to uncover the truth. Immerse yourself in the suspenseful world of No Lie Lives Forever by Todd M. Schoenberger. Available now on Amazon and at finer bookstores near you.
Welcome back to Buy, Hold, Sell. The markets were a bit flatlined except for the tech-heavy NASDAQ. But you saw a lot of tech companies. You saw Amazon up 4% today. Microsoft was up under 2%. Even Apple hit a fresh all-time high today and closed up 1%. Big-time numbers for big-time tech companies. And all the news is all about Jerome Powell actually being on Capitol Hill. And Toby, I want to go to you with this because one thing that we've talked about before is about the Fed put, which obviously could have been done this week with Jerome Powell speaking. But you have a new take on this called the mega cap put. You want to explain that for the audience?
Well, first off, if we go back, the ancient history, let's say like 2010, all of a sudden the Federal Reserve cut interest rates to zero after inflation. You couldn't own a bond because you were going to lose money on bonds, right? And stocks were the only game in town, right? So we were calling that the Fed put. And the Fed put is sort of Wall Street jargon for just saying is that they put a floor underneath the value of stocks. So it took the risk away, essentially, and therefore people bought a lot of stocks. And the stock market went up 16% a year from 2010 to 2020. Never happened before. Never been like that. Right? Okay. So then we had this, I don't know if you remember that thing, we had a pandemic, then we had this invasion and stuff happened.
I heard about it, yeah.
Exactly. And now we have the reverse, where the Fed is raising rates, so they're no more put from the Fed, but the mega cap stocks, because in the first segment I talked about this, it's just simply that if you're a money manager and you need to put money to work, and you had all these macroeconomic issues, starting with the fact that they're pulling all this cash out of the market, then you're going to go in these top 25 tech stocks. Why? Because they have huge amounts of cash, because they don't have any debt, because they have incredible margins, all those reasons, you're going to go to large growth. That's where the growth is if you're a growth investor. If you're a value investor, you're getting your nose punched in again. I'm going back to some of these guys who've been value investors in time. My friend Bob Olstein, God bless him.
Oh, yeah.
We used to have him on Bulls and Bears, and he just got crushed going into 2007, 2008 because banks were cheap. And I kept saying, Olstein, you crazy midget, you're out of your mind. I mean, there's real problems here, and blah, blah, blah. And literally his fund was down like 60% because he loaded up on, world changes, you got to change with it. And being Johnny One Note right now, used to be bet. Now Johnny One Note is we got a mega cap put, and there's really no. We're back to there as Tina that there's no alternative to AI generated or beneficial stocks that way, because that's the only place you got growth.
Yeah, well, I should go back to what we in our recent interview with Gina Martin Adams, the chief equity strategist at Bloomberg, and she came right out and really was quite optimistic. She's a returning guest to Buy, Hold, Sell. Yeah. This is the most optimistic she's ever been, and it was interesting because she did point out the fact that you can't look at the economy and then look at the earnings stream and start to think that they're correlated, because they're not.
Right.
So right now, we are not hitting that recessionary period in the earnings cycle. At least we haven't seen it yet. We've seen a slight deterioration, but nothing that's going to warrant us to really think that the bears are going to be taking over Wall Street. So what do you think, Toby? I mean, here we are. We're closed out second quarter. A big surprise right now. The S&P 500 is pointing at a bull market right now.
Yeah.
Do you think it continues into the third quarter? I mean, the AI story is not going away. So
Yeah.
I would think that we're going to be hitting higher highs. But what do you think?
Yeah. Well, I mean, there's a couple things here. There's, the word narrative, right? In the stock market is basically a condensation of about 425 words. But the narrative that was just always blown me away is that, remember, this bull market or this bottom started when the narrative was the Fed is going to start cutting rates in October at that meeting because, the economy will be in a tank, right? But yet that's not physically possible when you have 10 million jobs and 5 million people looking for jobs, right? It's not possible when you have 31% of your citizens either on Social Security or on other benefit programs. So their income's not going away. And now, I mean, really, the only people really getting hosed are the people who now have to start repaying their student loans. I don't know about you, but I never had to take a loan out, because the tuition was $28 a semester at UCLA.
In 1856,
and
that's right.
And I bartended and I paid my rent, with tips, right?
Yeah.
So maybe when 55 million people start having to pay those mortgage payments, or their student loan payments again, that's going to take, the economy down a peg. But until we get to that point, we've listed everything. You can't, the inflation rate is not going to come down in October. Okay, it's going to come down gradually. And Powell was right today when he said, "Hey, we're going to have at least 2 more cuts because, they're looking at very incremental, inflation coming down. Inflation can't come down till October because that's when year over year the rents come down from what the highs were a year ago." And the house prices come down, and services wages are flat. That's 56% of that CPE, core index. So we're going to see more cuts. Did I say see more? If anybody thinks that we're not going to see more rate hikes, they cannot read a spreadsheet. But that being said, goes back to the mega cap story, which they don't give a crap about interest rates because they have all the money they need. They borrow money cheaper than the Fed borrows money when they borrow it. So they are like these gigantic battleships, cruising ahead in the economic seas, while other guys are being left behind. Since there's so much of the market cap of these indexes, anytime, every week or month that somebody puts in money into their 401k or their IRA or whatever, and you go to the S&P 500, that gusher doesn't stop. People, if you're doing your employer, you just don't stop putting that money in. That money has to go in, and it does go in, and it goes into the indexes based on the market caps. So that's a function of the mechanics of the market that people are kidding themselves, or they're also kidding themselves that the Fed is going to stop, which they are not going to, because inflation is going to be way above 2% by February of next year.
Yeah, well, I think you're talking about the organic growth, and I completely agree with that statement. But on the side where I'm not exactly sold on the fact that with student loan repayment plans having to go back into effect, that it's going to impact the economy. I mean, we've had that years ago, and it didn't impact the economy. I can't imagine. I'm sure there's some study out there that's going to see a drain of 20 basis points on GDP or something. I don't even think it would be
I think it's incremental. It's incremental. But you just 5 million people looking for 10 million jobs.
Yeah.
You don't have recessions in that. Remember, the other narrative, Todd, was, and I was very behind this narrative, which is if the Fed actually wants to get to 2%, then you have to, kill 3 million jobs. And they just haven't been able to do it. in the old days, when I started on Wall Street in 81, when Volcker took the rates up to 18%, I
Yeah.
know people are shaking their heads now. 18%, some of it was 21%, for the standard business lending rate was 28%.
Yeah.
So guess what? We killed a lot of jobs, and boy, did we get rid of 15 to 17% inflation. But
Yeah.
this ain't them times.
Well,
we're in a different
well,
world.
I heard a guy on the financial channels this morning, and he was talking about on Bloomberg Radio, and he was talking about how with the economy has yet to see the real impact of 500 basis point
Yeah, the
increase
lag
in,
effect.
and yeah. But again, though, I mean, I think we have seen that. I mean, this has been going on for over a year now. It has been staggered, but I'm thinking that we could be on the brink of something really spectacular here. And more importantly, there isn't the headwinds. So we asked Gina about this the other day.
Yeah.
Everybody's talking about these headwinds. Let's talk about the positives that are out there. And these people at Bloomberg, all the analysts, everybody seems quite positive, quite bullish on the markets. AI is powering that, but it's not just there. They also were bullish on the consumer discretionary space. I'm not exactly sure why. I think of, and I'll go back to Target. I can't see that actually doing well over the next few quarters, but that's the outlier. I do think that people are back probably spending money. And you are right. You hit the nail on the head. With that many job openings out there and X amount of people that are laid off, they're still able to work, albeit probably not at the wage that they want, but I think it's going to be fine.
A little more macro is that the economy of 2023 is not the economy of 1982. It's not the economy of 1992.
Right.
And it's really not the economy of 2002 in terms, because remember, in addition to everything else for the tech stocks, remember they hired 3.5 million people during the pandemic. Well, guess what? Them 3.5 million people all got laid off. So their earnings power came down, and now their earnings power is way up because they got rid of a whole bunch of fixed overhead. So you just can't come up with a scenario that's negative on mega cap unless you're Tesla and you're selling at a 95 PE. And yeah, maybe you can do that, but so that's why I'm positive. I mean, remember, the stock market has really nothing to do with the economy.
Right.
People, obsess about the economy, but there's a lot of mechanics that have to do with how stocks get priced every day, every minute, and it has something to do with the economy. But if Gina's right, and she's got 6-7 different indexes that she's created.
Yeah, now
the earnings for the companies that are the big cap are going to go up. Now, we had the bear market in tech stocks because they did get ridiculously overvalued. And, the average tech stock was down 55%. Tesla's is down 70%, blah, 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 right? But the issue for technology has been that the corporations that they sell to, not the consumer technologies, but the corporate, were cutting down their spending. They were saying, listen, we're not going to spend as much on Amazon servers and on Oracle servers, so on and so forth. And they've already taken their spending down. But now with everybody wanting to have a generative AI bot for their company, so I can just ask, so I can just go in and say, hey, if the data was coming in real time, let's assume that, but the data's coming in real time, and let's say I'm the McDonald's manager for a region with 500 stores. I want to be able to say in real time, tell me any of those stores that are above sales budget and below sales budget right now. And I want that answer in about 3 to 5 seconds. Bill Gates said that whoever figures out that personal digital assistant, that's the next $1 trillion company.
Yeah.
We happen to have a software company we like. It's called Versus AI. It's a small cap company, about a $250 million market cap, but they have that software that allows you to have this personal agent and allows you to do it in real time. Everybody forgets about ChatGPT, that the large language model that you assemble to be able to takes a lot of time and a lot of money to put together. So by the time you're even asking the questions, you're not getting it in real time. And Versus has these operating system and programming language that allows you to get real-time data, ask a chat GPT. It's like chat GPT had a baby with Google. You can search anything on the information for your company as long as you're authorized to do it and get an immediate answer that's within a 99.9% accuracy rate. Can you imagine how that changes managing a
Oh.
business?
Oh yeah.
One of the big companies that's logistics, I've said this before, logistics is 10% of the freaking US GDP. And this large company, multi-billion dollar company, installed this Versus operating system and program, and they cut their labor costs 35%. The floor labor, they're called them pickers. I don't know if I want to have that on my resume, but it 35%. And then the other thing was that shockingly, when you go become a floor picker at Amazon or at NRI or these companies, you last about a year because it's a crap job. But with this automated system, you cut down your steps by 35% because it knows exactly where you have to go and what's going, blah, blah, blah. Anyway, my point is, when you see these actual mind-boggling AI advances in productivity, and then you talk about the fact that, oh yeah, every Western country is now in such a steep decline of population that I mean, we're not going to be Italy yet, where you're essentially 30% lower population than you need to be to keep your economy going, or Japan, which is even more. But AI, if you're a religious person, I would say, well, thank you, God, you're giving it just at the right time, because there's no way in hell. We already know, based on how many Gen Xers had children, how many Gen Z had children, that the United States is going to be short about 40 million people population by 2035. And who's going to do the work then?
Well, that's right, and that's 40 million less viewers for buy, hold, sell. So that's reason for all of us to be concerned. That's for sure. So listen, I love that. Versus AI, I think that's great. We'll definitely put that out there.
Well,
obviously, for the audience members.
It's such a unique. It has a solution today. I'll give you another example.
Tell me.
What the biggest issue right now is getting enough NVIDIA chips to run your ChatGPT operation, right? They have this H100 graphical processing unit GPU. It costs $30,000 per one. People are trading them for $50,000 on the open market, right? I mean, it's
incredible.
It's better than crack, right? So, not that I know anything about crack, but I have friends who do. So, the software that Versus has allows somebody to build these large language models with like 90% less GPUs. So that's tens or hundreds of millions of dollars you save by letting the software do remember, the whole thing of why we exploded was that, boom, all of a sudden, this graphic processing unit could do 30 trillion calculations in a second. That's why this thing took off. That's why NVIDIA, beat their numbers by $12-15 billion. It's never happened before. I've been doing AI for 14 years, but it was just in a very, very limited basis because of the speed. So that's what's unleashed, this 30 trillion calculations per second. That is a game changer that then enables, generative AI and then real AI, which actually thinks and makes judgments. That's what's taken off. So that guy is not going back in the stall. That horse has left the barn. But the biggest guys who are going to benefit are the people who have the most cash and don't have to borrow money to play it. So anyway, have I made my point?
It's a great point. Oh my goodness, it's a wonderful point. Now, Toby, we're going to close it out with that, but tell the audience how they can find this stuff, because you got some great commentary out there. What do they need to do to actually get your stuff and subscribe?
If you just go to Tobin.io, it's pretty simple. Even I can remember that. Just Tobin.io, and that takes you to
Tobin.io. I like that.
It's a personalized URL. And that's the simplest way. Just go to True Market Insiders, and that's TMI.io or TrueMarketInsiders.io. And our service is called Transformity Investor. We just tomorrow introduced, depending when you show this, tomorrow on Friday, we put together our, which I'm calling, very quietly, the AI generational wealth building portfolio, because I do strongly believe if you get the right stocks here, that This is going to be like 1995 when we were buying JDS Uniphase and Cisco and Dell and AOL, and
Right.
they made super fortunes. We're going to have super fortunes made here.
Love it.
But you
Love
just
it.
can't chase them. You got to actually buy them like a prudent investor.
Right. Well, that makes a lot of sense. Well, listen, we're going to end it right there, Toby. So much to say. But next week, I got to tell you, 4th of July fireworks are going to come early for Buy, Hold, Sell. We have an all-star list of guests. We have Anastasia Almarosa coming on the show. Liz Ann Saunders is coming back. Sam Stovall is going to be here. We have so many, and we are going to have all kinds of big surprises as well. So it's definitely a show, the shows you do not want to miss. So thank you so much on behalf of Tobin Smith and Todd Schoenberger. I'm Todd. Hey, what a day. Thank you so much for watching Buy, Hold, Sell. We'll catch you next time. Take care. All right.
Buy, Hold, Sell, brought to you by CrossCheck Management.
Hi, everyone.
I want you to smash that like button.